All right, so let's go ahead and get started. This is something different. I think going forward, I'm not going to mute anybody and ask you all to mute yourselves. But for today, I hit the mute all. It'll probably take me 20 minutes to find the unmute all, so I'm not even going to bother. I can unmute anybody as we go, so that's not a problem. I'll talk about the reasons for it. So I'm going to record something for George. So if it sounds funny that I'm talking to a bunch of people, the first couple of minutes, George wanted me to do a little bit of a vignette. Yeah, TG, how do I disable the waiting room? See if you can tell me that before I get officially started. Click on participants. Okay, more. I can see put in waiting room at the bottom. Okay, hold on. Allow mute. Okay, ask all to allow. Enable waiting room. It doesn't want me to turn it off. All right, well, I'll just keep watching it for now. All right, I'm going to go ahead and start, which I think I said already. This is Jeff Scott. Welcome to the inaugural edition of my virtual investing club. I didn't know what to call this. For those who know me, you know I like to do programs like this. I do them all the time. I think the only one that does them more is probably Ron. But Ron's retired and I'm not retired yet. So I retired 18 months so then I could see if I can have the stamina that Ron does. I'm lonely, not lonely personally, but I'm lonely from the investing perspective. Typically I do one or two of my own seminars a year where I invite people to come to Florida, trying to keep some of what Ian and Ron used to do alive. And then my buddy who I lost, George Lee, he would join me multiple times a year, Orange County or Vegas or something, and we would do this as well. Not doing that anymore. Maybe with COVID going away, people will start to travel. We're actually had a big talk today about bringing everybody back into the office. So maybe traveling is going to happen again, and I can do another live meeting. I sure hope so because I like to do that. So short of that, let's do something else that we can do on a regular basis. So as always, and everything I do, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I think everybody here knows when I say HGSI doc, I am a doc. And I kid you not, most physicians I know lose a lot of money in the stock market. And partly of why I even started doing my videos, which started before the 2006-7. I remember doing one from India talking about these Hindenburg omens that were firing in 2007. I started doing that for my friends, and a lot of the people I started doing it for that I'm friends with, shocker, are other physicians. So I learned how to trade by sitting in a doctor's lounge and getting bad advice and blowing up accounts, and I quickly realized that that is not a sustainable business model. So I started learning, and that was my education. Meeting Ian along the way probably made the biggest difference. I'll talk about that. So I'm independent. I don't sell anything. I've got nothing to sell you tonight. I do invite people to join me who may have something to sell. Today, TG Watkins, and I'll introduce him later. The Moxie Trader is here. Everything I have, I paid for at some point. Trading involves risk, and you and your owner are solely responsible for any decisions that you might make. I'm going to hide my picture because it's flicking all over the place. Maybe I'll move it up here, or maybe I'll just move it out. So why did I start this? I miss live interactions. I want two-way discussions. Of course, then you can say, if you want two-way discussions, then why would you mute me? I'll learn. I can unmute you, and I will at the right time. I found the right spot. I wanted to increase activity among HGSI users, and I'm the guilty as anybody. I've got a Discord site, which I'll put an invite out when I send the video around. I love to see that activated. I don't charge for it. I don't get paid anything, but it's a place that we can share ideas. And, I would love to have people start sharing charts and thoughts. I got lots to share. In fact, if there's enough sharing, I'll even share some indicators and stuff. And then you can tell, usually it used to be when the market was boring that there'd be nobody posting to well, back then it was a Yahoo group and Ian was around and he was posting, but there's nobody posts. I mean, Dave Steckler used to toast the weekends, lots of things, nobody posts. So how do we get some noise going among us? If I can keep Ian's teachings alive, that's a good thing. As I said, I can introduce you to folks that I've met along my journey that I like, that I think have value. Today, TG. Next month will be Dr. Keith Wade, perhaps Sagar after that. And when I invite somebody on, and I'll tell you the little secrets of the industry of trading. In most forums, if I brought TG on today, I'd be getting a kickback if you bought something. I don't play that game. I don't need any more money. So I tell them, I don't take a penny, never do, never will. And if there can be additional discounts for you, that's great. I'll share some of my learnings from my 30 years of trading. And although I'm going to use HGSI a lot, it is technology agnostic. So when Sager comes on, he'll probably be using Metastock and TradeStation because that's where his stuff is. Dr. Keith Wade, when he's on, hopefully he'll do next month, he will do probably Thinkorswim and TradeStation and other technologies where his stuff is on. Some of the things that were developed over 15 years from Ian, I only got an HGSI, although I've duplicated some. Now here's something where you have to, I'm different. We're all different. And just because you're different doesn't mean somebody's better or worse. But I am definitely different. All right. I don't have time, except for the year of COVID, 2020, my best year ever. I think it was the market, not me, but not me sitting at home. Typically, I'm on the road 3 or 4 times a week. And we have our own plane at work, which is wonderful, but the internet sucks. I can't even connect to Thinkorswim. So I can't trade during the day. So I have to develop a trading style that allows me to make money, take a risk that I'm willing to tolerate, and do it by looking at stocks at night and on the weekend and not during the day. I work full time. I've started a number of healthcare companies, even though I used to practice, and this one's a big one. I was one of the founders. We got 3,500 employees. It's a real business, and it takes time. So I don't have time to sit in front of my screens. Yes, when the market has lots of volatility, I'll pull out my favorite mobile trading device, sometimes referred to as an iPhone, because the TD Ameritrade app, and that's where I do most of my trades, is so damn good, excuse my French. And I put collars very quickly on my positions because I know I'm not going to be watching them during the day. I'm very careful around earnings. You've seen that in my slides every week about, it's a decision you make basically if you want to hold during earnings, and it's really a bad decision when you don't know when the earnings dates are. And since I'm on the road, I've adopted strategies that do not involve active involvement intraday. And I'm a swing to position trader. And that may be different than everybody on this call, but I doubt it. When I say that I enter a position with a defined stop, maybe a target where I'll take a half off, but nothing makes me happier than to sit on my hands and let the stock keep going and going and going. And my biggest gains, and this is not to show off by any means, I'll show you 2 of them because I put both of them in videos and I remember the dates of the first one exactly. They've been sit on your hands trades. All right, so here, this is not bragging. This is luck, maybe, okay? I was sitting in April of 2018 in Orange County. I was at a meeting with George Lee, and I remember it was a really low budget meeting. It was in somebody's house, David Larson's house. And it really wasn't set up for a meeting, but it turned out to be okay. And I spoke half the time, or, well, George was there. I spoke 20%, George spoke 80%, no matter how much we were supposed to divide it. What a great guy. And I was sitting there, and I remembered I had $50,000 sitting in an account that was at Schwab that was in cash. And I never traded that money because I hated their trading tools compared to TOS. It didn't have, at least TOS, because of Bob Meager, I have a lot of my HGSI indicators. So I noted Tandem at $4.50. I put it in my Sunday video on April 8th, 2018. Go find it. It's there. And, even a blind squirrel finds a nut. I was on the road on the 9th, so I couldn't buy it until the 10th. So I bought it on the 10th, and you could see at least this lot, 1,000 shares. I bought a lot, but I had the 1,000 I have left. I bought on April 10th, and I paid a lot more than $4.50. I paid $6.93. I took profits along the way. Sometimes I wish I didn't. I bought 2 boats with the profits from that Tandem position, a 31 and a 35-foot whaler. They were really expensive because Tandem was in the 50s then, and now look at Tandem is now $129 a share. And I don't include any of this data in my 2020 return because it's not my trading account. This is my forgetting account. So there are 3 stocks in this account. The first stock was bought April 10th, 2018. The second was bought March 19th of 2019. And the third was bought August 16th of 2019. I had some ConocoPhillips that I was in and out of at one point. Oh my God. We'll have to wait until she connects, but it's like oldies night. Murda, welcome. Been a long time. So these are 3 stocks that I bought and forgot, and I don't recommend buying and forgetting. Now, of course, I had stops. I took my profits early on, but just to show the power sometimes of letting things run, all right, look at the percentage return since April of 2018. Look at the profits that I have left on a $50,000 investment. This is after 2 boats. The point here, again, was not to brag. This is sort of embarrassing. I've got these 3 things, I don't pay any attention to them. Was I wanted to build a case that maybe active trading is, or hyperactive trading is not the way to build wealth. And in fact, this is Tandem's chart. And I believe, make sure this is Tandem. Oh, this is C, I'm sorry. The other one here, this one's bizarre. I thought this was a Chinese gaming stock, and I just forgot about it. And it's run up from the $35 price I bought it for, and now it's $343, and it's off its highs. Turns out it's a Singapore, turned into a Singapore Amazon, but it was a Chinese gaming stock when I bought it. Again, I want to find the stock here, where my arrow is, and I want to watch it do this, don't you? Remember Generac? This was maybe a year ago, maybe 2 years ago. Time flies during COVID. It was about $98, and I said I did I think it was a live video, and I presented Generac. I know people bought it because I kept getting text messages that people were making money on my Generac call. Oh, I live in Florida. Everybody goes out and spends $35,000 on a Generac in my neighborhood on one of their backup generators. Hell, Kathy has one. She got one, then I had to get one. Well, here's $100. So why would I wanted to sell it? Yeah, of course you have volatility, but you know what? I take half off at my target, which is usually 1 or 2 times the risk I'm taking. I forget about the rest. Or I'll talk about my stop management. I don't really forget about the rest, but I want to maximize my return. Now, a little bit about options. I am a horrible person to talk to you about options. You can probably tell when I go, I can't remember this is a strangle or a straddle. I hate those things. Why would I want to do something that either I buy a straddle, which is going to lose 80% of the time, or I sell a straddle where I get to keep the money, but it's your upside is limited to the premium you take. I don't like that. I like position trading so I can make a lot of money. Uh-oh. Is it okay now, the audio? I just saw that. You know, it's funny. I'm going to turn off my picture because it was weird for a few minutes in the video I did Sunday. It's been okay for a few minutes. Okay, thanks, TG. So I don't speak Greek and I don't trade options the way that anybody taught me. So when I speak options, take what I say as risky and not standard trading. Right? I'm a fully directional trader. If I'm going to put $1 out, I want to make $4. I don't want to get paid $1 and risk $5. That's not how I think. All right, I know perfect people make a lot of money being sideways market traders. In any trade I take, stocks or options, I carry risk. When I look at how big of an option position I take the size of that position, which gives me the same maximum loss if I buy stocks. And the reason why I like options as a stock replacement is leverage. So I can have a much bigger upside on that option position. I take the same boring trades over and over again. Long stock, obviously a great way of trading. You're not paying any premium. The stock doesn't have to move more than a penny for you to make money. And you have 100% risk and an infinite gain. I like that. A long call, it's kind of like a stock, except it's got to move the amount of the premium. And then you have to know what strike price. Well, I buy at the money. I'm buying stock replacement, which means I typically pay some premium. A bull call spread, well, what happens if that premium is too much? Like you want to go buy NVIDIA tomorrow? I don't know if you do or you don't. It had kind of a reversal like a lot of things today. It's got very big premium. So I buy a call at the money and I sell a call out 10, $20 in strike price and I reduce some of the cost of that call. I've talked about the synthetics forever where I buy a call and buy a put at the same price. All the deltas, all those things neutralize them out. A long synthetic behaves just like a stock. If I want to protect my margin account and reduce my risk, I'll do a long synthetic, long call, short put, and then buy a long put underneath the short put so I reduce my risk. And then, believe it or not, I even do butterflies. But I think I've never watched a presentation about butterflies, but I think what I do is the broken wing butterfly where they're not the same size. So I might go buy a call and then $10 away, sell two calls. And then the typical butterfly, another $10 away, I'd buy a call back. But if I'm right and the stock has a major move, I get nothing. So I don't make the short spread as long as the long spread, and I'll show you that. So I make money even if it goes too far. And the only time I sell premium is part of a spread. You see this every week on my reviews. Yeah, I can't say enough about this guy. Ian was a saint. He is such a great guy. And I'm jealous of this guy because he actually got to partner with Ian in the later years of Ian's life. I mean, Ron was in the audience with us. Ron's on this call. And Ron got to become Ian's partner. What a wonderful opportunity. So all the funny words I use, the white slides with the color little design, that's Ian stuff. Now, Ian used to tell a story about how he learned from O'Neill and how he had all the Xerox stocks, he diversified. Ian introduced me to Gil Morales, who came to PV and came to one of Ian's talks. Here's my good buddy, George Lee, also may rest in peace like Ian. George passed away last year. Minervini, you know, so many of the things that Minervini does in charts kind of looks like the same patterns Ian used to do. Kind of looks like the cup and handles with his own derivation that O'Neill did. And clearly, Minervini is another O'Neill Ian person. John Person, the only outside person to put a official package into HGSI, I'm not sure I'm going to push other people. I got a lot of negative feedback because people had to pay for it, stuff like that. Bygones, I don't care anymore. But a third party is not going to put something in except that they can monetize it. Sagar, hopefully you all have seen him on his YouTube videos. He's got some great tools. And then Van Tharp, the king of position size and money management. Roy Kelly's got an interesting approach to the market too. I've learned a lot from. If you come into my computer, the thing that's different here is wealth charts, and I'm going to probably show you. Um, it's made it to my rank top list. And as I mentioned before, only buy it during Wealth 365 or other special Rob Hoffman events, because why pay $297 a month when you can get it for $97? And I got 3 designers of stuff that I know of on this call. I think I got Dr. Wade, I know I got TG, and I got Sagar. You need to look at that platform as developers, because I called somebody I knew because I wanted to verify. He had over 1,000 people in his room on one of his recent Wealth 365 presentations. That looks like a very interesting platform. Of course, it doesn't have any of the HGSI stuff in, so it's just cool, but I use it nonetheless. My purpose of these, again, this is introductory. I won't have to do this again. We're going to look at the markets very quick. At the end, I want to take your questions, including stocks to look at. I'm not sure we'll get to many of Ian's pearls. They're all pearls that I've learned from him. We'll talk about. I was going to build a leaders list. That's when I looked at the market at 11:30. And then when I got out of my meeting at 3:30, I said, well, maybe it's not a leaders list day. We had a pretty impressive reversal, whether it was because of the corporate taxes, whether, who knows, economic numbers. But we had what to me was a pretty big reversal during the day. I'll record these. I don't charge for anything. And the next one I've already booked will be November 16th at 7:30 p.m. And I'll put this in the email where I send out the video, simple, tinyurl.com, HGSIdoc, Stock Club, November. So again, I'll start looking at the market with my thoughts. At some point, I'll unmute everybody and we can have conversation. And TG will take over at about 8:15, so about 22 minutes. And then we'll think about creating a leaders list. So I've got 47 people here. It's about half of the people that registered. I want you to think, because I'm going to ask for it, but don't give it to me now. Tell me what you think is a leader right now. Ian typically would define a leader as a stock that's gone from the lower left-hand corner to the upper right-hand corner. It's tight, not loose. We'll talk about that. It's got to be close to new highs or it can't really be a leader, can it? And what we're going to do, hopefully, between 8:45 and when we finish, is we'll put together a leaders list. And I'll show you how I might use that to figure out whether this market is, when it's rolling over. So Dr. Wade, I'm hoping we'll do this next week. I suspect next month rather, if he's available. Sagar, I want you as well, and I've already mentioned it to Rob Hoffman, and I think I'll talk to John about that. We're going to a concert very soon. So what do I want to look at? Let's look at in Thinkorswim, and let's just take a look at the markets. We can see right now, I do look at this at night. The funny thing is, am I the only person that's noticed? Maybe you've all noticed. The futures, sometimes the worse they are, the better the day is. I mean, my favorite days are when I wake up and my ex-best friend, neighbor, Kathy, sends me a text. She's still my best friend, neighbor type of thing, but we're not neighbors anymore. So she can't really be my neighbor, but her and her husband are buddies. She sends me a text, oh, it's going to be an awful day today. I know I'm going to make money that day because the market always seems to reverse, at least in this market. So she's my contrarian indicator. So we can see the futures are doing okay. The Russell's the one I think that reversed probably the most today, down a teeny. So I like looking at charts in lots of platforms. So let's just look at them in Thinkorswim today. And I really only want to look at a simple chart. So let me go into maximizing sells. So here, this last green bar, because this is futures, is after hours. So we're not going to count that bar. So I look at this, and I think we all can agree the S&P has been in a wonderful uptrend. I've talked about, and everybody else has in the world, how many times it bounced off the 50 until it didn't. It failed on the return here, it failed on the return here, but it broke through nicely back here on 10/15, and the market's done very well. And it's hard to be bearish, I believe, at an all-time high. I mean, do I like a candlestick that does this? Heck no. I mean, at best case, it's a doji, or it's a shooting star. Now, if the market opened up down tomorrow, all right, that's a bad sign if it closes down. If the market closes down tomorrow or the following day, it's what John Person would call a low close doji, and that's a very bearish candlestick. Typically, when I like looking back, and do I have any days that look like this? And this day kind of looks like that. And this day looked like that. I mean, these are short-term tops in the market. So when I see that, that would make me think there could be weakness coming on. Now, I think, as I said, that's a good point, Ron. I'll bring that up. How volume has been going down, whether I look at OBV here, or if I look at, the high volumes are the down days, or the red days, the negative days. When I show you the expected move charts, you'll see why maybe we've got the move for the week already. I think the reality is, and I said it at the end of my presentation over the weekend, is that earnings are going to drive this week as much or more than the individual indices. I mean, that the news and everything else. And typically everything I do is top down. It's what the market's doing. But this is the week when my portfolio is going to be damned or rewarded because of earnings. Here is the NASDAQ. Now, if I go back, just look at the S&P again, and let me bring it back out to the full. This here is kind of tight, all right? Not perfectly tight, but it's not a stock. I think indexes might be harder to see that, but that's pretty tight, all right? This here has been pretty tight coming up here. The NASDAQ, it's a little bit more wobbly, a little bit looser. The NASDAQ, same thing, clearly in an uptrend. The NASDAQ peaked back here. So where we had a peak the October 15th on the S&P futures, the NASDAQ futures peaked back here September 10th. So the NASDAQ has not taken out that high yet. And if anything, what would you call today? It's either a double or a triple top. I mean, you have this bar here, you got this bar here, and then you got the high bar. The NASDAQ basically is at a triple top. Now, maybe these are too close together to call it a triple top, but I remember that Oscar Carboni guy, whatever his name is, he's hilarious. I've never watched his videos. Sell double tops. Well, he had a double top today in the NASDAQ. Well, that doesn't make me feel hyper bullish for the next couple of days. Again, I think earnings will determine what happens. The Dow futures, definitely not tight. Look how this is all over the place. In fact, the Dow futures have even visited the 200-day moving average. And just for green on all my charts, white or black, will be a 17-day simple moving average. Yellow on a black, blue on a white chart is a 50-day simple, and red is a 200-day. But how wonderful was this? I remember, it came down, it got close to the 200, it reversed, and the market went up. I mean, just what it's supposed to do, except for when it doesn't. And again, you look at the Dow futures, all-time high was hit today during the day. And just like the S&P, intraday reversal. A positive day here, it's green, but gave up a lot of its gains, of course, when I was in my meeting. Hence why I have stops. Then you got Mr. Russell. This one looks totally different. Volume is gone, all right, to Ron Brown's point. This thing has gone sideways the whole year, since February. And you could actually say the bottom of this started here, like February 3rd. So we've gone sideways in the Russell. So the others have been trending markets with a pullback, and the Russell has been in a Darvis box and interestingly contracted. Now, I kind of think if there was, I mean, the problem is there's no volume here, but you've actually consolidated on the 200. You got the three major moving averages all came together and we moved up. That's kind of bullish feeling. But then I got this thing up here, which is the top of the box. So we'll see. So, I mean, I was much more bullish on Sunday. And then the VIX really didn't do much today. It was up a little bit during the day, I believe. But it's way down in its pattern. And the one that impacts on me the most is the dollar, because I have a big Cleveland Cliff position. I started nibbling on Royal Gold, and they don't like a strong dollar. And today was a strong dollar day. So I always want to look at the markets. And again, the futures are up. We're near all-time highs. We're ending the month of October, going into November. So for many reasons, the market should do well here, but it doesn't always do well. And at least for this week, I see things that have me a little concerned. Let's talk about one of those. I like to look at these expected move charts. Yes, I, like everybody else, probably learned them from Don Kaufman, or at least heard them from Don Kaufman. Well, darn, I find them really cool. Here's the S&P futures. So as I've talked about and probably mess up half the time on my videos, this is basically the market makers. Here's where it closed the prior week. It's pricing a straddle at the money. So the market maker is pricing what they're going to charge you to buy a call and a put at the money. So you win if the stock moves up or down, but it has to move the distance of the premium you're paying for that straddle. And that premium is basically the expected move. The difference between flat, yeah, market's going to like Microsoft. I agree with that. I hope so, because I got a big position. Between this line and this line is the total premium on a long call and a long put. Difference between this line and this line is the total premium on a long call or a long put. If you hold it to the end of the week, you can end up inside the green and the red, and the market makers win. You can be above, or you could be below. If you're above the green, the buyer of the straddle wins. If you're below the red, the buyer of the straddle wins. So I went back and did some research. It's supposed to be in the mid 70s, but I found over 80% of the time the stock ends up between the green and the red. All right, so how do I use that in my trading? Here is Monday, really nice day. Here is Tuesday, had I been paying attention. Not only did we get a shooting star on Tuesday, we got a shooting star right into the expected move. Doesn't mean we can't go right through it tomorrow because of the excellent point that we have Microsoft earnings. But that's where you're going to expect resistance every time. What about the NASDAQ? Same darn thing. Ran it way above the expected move. Everybody, maybe we'll get some gamma squeeze if people started buying stuff, but came back in. So 80% of the time we're going to go in with the green and the red. So when it moves out, expect a reversal. You're not guaranteed one, But when I see it out and reverse, especially if it takes out the low of this candle here, I'm probably going to go in that direction. Now, but Jeff, you said you're a position trader. Of course I am, but there's these things called ETFs, and I play triple Qs and I play diamonds and other things if I think there's a short-term opportunity in the market. The Dow futures did absolutely nothing. Yes, they had a reversal. They're well within their range. The Russell futures, same thing. This is only on this chart. Ignore that high. It's not a real year. The Russell, it's a 3-month high, traded up just below the green line. So if 80% of the time the stock's going to stay between the green and the red, that was a cooling signal. Still can go up. There's no rule against it. 20% of the time it won't, and not a whole lot there to talk about. So I'll do that every night. All right. And I'm looking at the clock. I got about 12 more minutes. So if we go back or think back, we're not going to go back to I'll go back to the PowerPoint for 1 second. I have spent a lot of time trying to figure out, how do I find the stock here? How do I find the stock here? What is it that I need to do? What's going to give me that? So if you see my messy charts and you wonder why, because it turns out I haven't cracked anything, but I found something that works for me. And we open up a chart. And I've got no idea which computer that chart's going to open up on. And I've got a lot of stuff open. Here we go. I got a chart. Yay. I'm going to make this a simple daily chart. And I'm going to use, I can't decide whether I want to use the semi-log function in HGSI or I want to go into the chart here. And I go back and forth, and some people use regular, some the linear, some use semi-log, some use log. I've been doing this forever, and I still don't know what I want to use. So I'm going to look at the log. And I'm going to go back to when this stock, it wasn't a year ago. Yeah, it was a year and a couple months. This is the, where is it? Must have been over here. Let me go back to that period of time. And why was I so excited about the stock? And what is it that I look for every day? Now, I did not prep this. I did not go back and find the day and say, all right, but this is the day I gave it to you. It had to be because it gapped up the next day. And, there's a number of things on this chart. And these are all from Ian. All right, I wish I was as smart as Ian. The weekly bongo of which I was involved in creating is a long-term trending indicator. It's pretty darn good. It gets you in late, gets you out a little late, but it helps you capture the majority of an uptrend. So the bongo weekly has been positive ever since the date I talked about this stock, which looks like it was 5/22/2020. I think that somebody go back and fact check me or whatever. That wasn't 5/22. It was 5/15 was the weekend. I always do it on the weekend. That was Friday. That was Monday. So it's been green for 5/22. So that tells me stock's in an uptrend. Again, I buy this stock. I pick my target, what my stop loss is going to be, and my stop loss is probably underneath this bar. This was before I knew it was going to gap up against me. And then the market had already started running up, I probably have put 2 times my risk as my target. I take off half, I let the rest run. So I've been in this stock ever since, and it's not in the 2s, it's in the 4s now. So what was it that got my attention? So the first thing is, we're in a squeeze. Let me get to the right date. It's this date. I moved. So this is the right date, right? Is this $100? So this was Friday, Thursday, Friday. All right, 15th. There it is. So I'm in a squeeze. My daily bongo has turned green. That's good. It tells me the short trend is good. I'm looking at the high jump. I'm in the middle of the range. That's perfect. I had a squeeze. I come down here. This green arrow here is a John Person buy signal. This one here is a MOBO breakout. So I got a MOBO breakout from a squeeze and a new John Person buy signal. If I look at relative strength is improving. Now, I'm not going to say it's positive divergence because the price was getting better for a while, but it's improving. And I had a kahuna. And I find that kahuna to tell me, wake up, Jeff, things are happening in the market. Now, it would have been a safer play down here, not necessarily with this price action, when my weekly bongo turned green, because now I've got the longer trend in my favor as well. So I spend a lot of time, and I am very much targeting in on stocks that are coming out of a base with a momentum driver and a positive market. And I look for those all day long. And not only do I want a good market, I want to find it in the right industry group. Well, it gets ugly at times, but if you got into the stock at $100, you're pretty happy with me now. This one hurt, but I didn't say I don't trade options. I do buy puts. I went bad again. Is my audio still bad? Okay, so let me figure out what I'm going to do. All right. Give me a second. Let me hook up. I got another mic. Now it's fine. All right, so I'm going to keep going this because the more I play around, the more likely I'll screw it up. So let me go back down here. So what I do every day is, and this is mostly on the weekends, but I'll spend an hour at night. Heck, I kind of like doing this, is I will open up HGSI and I will make an assessment on the market. I'll hit industry groups. I'll hit warehouse. Those are Ron's groups, not my groups, but he makes them available to everybody. I will bring up all the different industry groups. There's 174. I will put 2-day EMA up, make sure I'm ranking by raw combo, and I will come here, I will right click, change to index group, and I will every night try and look at the top 10 industry groups and try and look at the ones above, the stocks above the index. I'm just going to let this open. It doesn't normally take this long, but if you haven't noticed, I've got Thinkorswim, TradeStation, HGSI, PowerPoint. I've got a couple of browsers, my email things. I'm zooming it, and I'm using Snagit to record. So this is actually a pretty incredible computer. So let's look at Tesla. You can't put this on the leaders list because I'm putting it on it right now. So there is no question that one of the leaders in the market today is Tesla. In fact, you could almost argue that Tesla today did what the market did. And did this just declare a top in this bull run with Tesla becoming $1 trillion story? It wouldn't be the craziest idea for Tesla at $1 trillion to be the top. But clearly, Tesla is a leader. It's hard for me to imagine buying it up here, but somebody is. And it's hard for me to even imagine buying options here because those options are going to be expensive. So the only one above the index is Tesla. Now, what I'm kind of curious about is, not that I'm a fundamentalist, but here's Ford. And if you look at Ford off the March 20 lows, it's gone from 3.5 up to 16. everybody used to say Tesla was too expensive because they compared it to the multiple of GM, Ford, and others. What happens to Ford when it gets its electric line out and they compare it to the multiple of Tesla? Maybe Tesla's priced right and the rest of them are wrong. So Tesla was the first one. Then I would look at specialty pharma. And again, using HGSI, you highlight the group, then with your right mouse click, you open it up and the left, change to the index group, and only a couple stocks are above. And this is a rumored buyout, so it's already run. I don't know I want to play that. Here is, who is this company? This is INOTIV, a biotech company. Never heard of it. I don't care. It's 193,000 shares. I should have put a filter on. That wouldn't have showed it to me. I won't buy something that small. One, there's probably no options. And if there are options, they're going to be ridiculous spread and not enough volume to ever get out of them. I've learned that from mistakes. Occidental Petroleum. This one has been on the list forever. In fact, it was one of the stocks on my list this Sunday. So I went to the third industry group down, and I know we're getting close to we're at time for TG. So I'm just going to look at this company, and then I'm going to turn it over to TG. And why did it make my list on Friday, on the weekend, on Friday night? Because it had pulled back into the moving averages. It had a pocket pivot. It's not the best time to buy it. I mean, here was a time to buy it. You know, you got to sometimes give a little leeway. You had a kahuna here. You had a mobile breakout, a new John person buy and a squeeze within a 2-day period of time. And something that I just want to point out, this little green box there, that's a Eureka, and I think that's calculated on the NASDAQ. I have to see which one it's set on. I run them both. And that was a market reversal, time to go long signal as well. So I'd rather have bought it here, but you know, sometimes you just don't see everything. So we're going to come back to this. You're going to start looking at your stocks that you think are leaders, and we're going to do sort of a lightning round. But right now, I'm going to turn this over to TG Watkins. So this is kind of cool, all right? I use TG stuff, and I met TG's dad, and then through his dad, I met TG. TG developed an indicator set that I started playing with that was very cool. And next thing you know, the guy's a part of the John Carter organization. So I'm changing the host to TG, and I'm going to stop sharing, and we'll let TG start showing his. Hopefully. There he is. Okay, I don't hear you, TG. Maybe I got to unmute you. Or maybe you have to unmute yourself. All right, still don't hear you. All right, what am I doing wrong here?
All right, can you guys hear me now? Okay, we're just gonna do it that way, make it easy. So I got this nice Yeti mic, but it's not picking up for some reason. All right, so everybody should be able to see me and hear me. And then got my screen all up and running. Is that true, Mike or Jeff?
I don't see you, but I hear you and I see your screen.
What you can also do is if you need to select anything, Okay.
You're good. Just go ahead. We don't need to see your picture. I know you're young and handsome compared to us old guys, but we can live
Okay.
without that for a few hours.
And trying to get my recording software working. It's not because I like to draw. Yeah.
Oh God. I'm a Braves fan, and obviously I'm missing the beginning of the World Series. So now they can talk about solar power because Jorge Soler or Soleil or whatever they call him just hit a home run in his first at bat in the World Series in the first inning. So it's now solar power day.
All right, then. Well, I think one thing I'll put up here just so that you guys have something to look at is this is my website. If you guys want to come check me out, if you don't know me, but yeah, I go way back. Of course, this is not doing it. I go way back with Jeffrey and even Ron, so I see that Ron is out there, and probably 15 years, if not more. I'm sure my dad goes back even further, and that's how long that I've known both Ron and Jeffrey. And as Jeffrey said, he helped me kind of get this thing up and running when I was figuring out how to trade, and then I got kind of worked with the indicator, and then I just had more and more stuff to go with. And he said, yeah, you should turn this into a business and sell it. And so I started my own business, moxietrader.com. And then I was doing that for a few years and thought, well, I don't really want to reinvent the wheel, so let me go do something about this. And I actually ran into John Carter. And he said, yeah, come on board. And so that's been working out really well for the last couple of years. And then one other thing that we did is, as part of being with Simpler Trading, we got on board with stockcharts.com, which I know a lot of people out there like to use too. And so we've got the Moxie indicator on stock charts in addition to Thinkorswim. So just one thing, I'll put it up here for now. We can kind of come back to it. Like, I'm not here to sell necessarily. I'm just here telling you guys who I am, what I'm. And if you're interested, we do have coupon codes for the indicator. And you can check it here. So if you want to go to stockcharts.com, it's Moxie10. And for Thinkorswim through Simpler Trading, it's HGSI is the coupon code. And is most everybody hearing me? I'm getting somebody saying that they aren't.
I can hear you, but I don't see your screen anymore.
Well,
but I may have done something
okay, because it shows that I'm sharing. Hopefully everybody else can see that I'm sharing my screen. Because
okay, I'm sure that there it is. I got it now. Okay.
Right, and it looks like Pat got it too, so we got that figured out. My drawing tool is not working, and I'd have to restart my computer in order for that to work. This has been a thing lately, but we can go ahead and keep talking about it. So for me, using the Moxie indicator, it is a momentum-based indicator, and what it's trying to do is communicate what's going on really kind of behind price. And so, because if we notice divergences, divergences are basically how I operate. And so what we can see is for the S&P on this recent downtrend that we've had, we can see, maybe I can just use my line thing, that'll be the easiest since my drawing tool is not working, is what we can see is we've had price move down like that. And maybe you're thinking the world's coming to the end and this thing's falling over and we're never going to recover. Well, what you notice is through the Moxie indicator down here that it's made a higher low. There's your positive divergence. And so that's actually telling me that even though price went lower, the indicator's higher, and what it's trying to communicate to you is that the internal energy of price actually doesn't want to go lower. It's trying to push back up. And so you need to be aware of that, especially if you are trading short, and just the opposite if you're trading long. With this, I've got a whole bunch of words and methods that I use to trade. I'll just kind of keep it to a couple that I like to talk about, mainly trampoline moves and inverse trampoline moves. And the rule behind that is that an inverse trampoline move is that price should not be over the 50 SMA when the Moxie indicator is below zero. And you can see that right here with my cursor. So this was one of the first bounces that I was able to easily short for that reason, because we had price jump back up over the hourly 50. Moxie indicator was well below zero, and I've seen this just countless times. Go short it. Same thing with this other one. This last move up here was another inverse trampoline move. Price shot up. Moxie indicator was coming up, but it was still below zero. And then also based on my kind of trading, I look for price to come back down and test a moving average. So this whole move that started the little pullback in the market, notice that on the hourly chart here, we had the hourly 50 trending down the entire time. So the next time we got this thing popped up, in addition to the divergence that we had setting up on the Moxie indicator, I was looking for price to come back down and then bounce off of what now was an uptrending, right through here, uptrending hourly 50. So you can see that the moving average changed directions. And then a regular trampoline move is when price is below the 50, but the Moxie indicator is above zero. I call it that because it's exactly like that. It's like you just jump onto a trampoline and it shoots you right back up. And it's the way I kind of think about it is you're trying to take a beach ball and push it underneath water. And water is the 50 SMA. And the beach ball is price. And basically the buoyancy is the Moxie indicator. The indicator is telling you, hey, I'm over zero. I'm positive. I'm bullish. I want to go up. Yet price is going down and below the moving average. That's not right. It wants to push you right back up. So trampoline move, inverse trampoline move, it's the same concept, just reversed. And you can see the move that we got out of that. Now, if we take that and we apply it to the daily chart, you'll notice that we have an inverse trampoline move happening on the daily. This is the same situation as what I showed here on the hourly chart. So Jeffrey, I know you were saying like, well, we're kind of looking at some up days and ranges. I'm looking at this and I'm looking for price to pull back. We've had some really, really great days for the last 2 weeks, but we are coming up to, and I love to use these, they're Keltner channels. It's the third factor for the Keltner channel. Price does not like to get up and out of that third Keltner channel for too long, and we are now outside of it. So I'm looking at this saying, hey, we've hit our upper ranges. The other thing I look at on the hourly chart is we have not tested, other than when we first got our move up right here, we have not tested the hourly 50 this entire time. And the hourly 50 is this magenta colored line. I look at this and I say, there's a huge air pocket right there. And at some point, price will need to test that hourly 50. And based on what I typically see here, price is probably going to go back below the hourly 50. And I think as a good example, I could show you this. I think proof is in the pudding, so I can always just show you. You name a stock and I can show you the kind of chart patterns that I'm used to and that I see and how I see them over and over and over again. And so if we even take just the S&P and we go back to last October area, you can see that this is basically where we are. So you can see I'm leaving my cursor right there. And you can see on the daily chart, which is on the left screen, we had price jump up. Where is it? It's at that third Keltner channel and also pretty much a double top. Now I know we're making new all-time highs, sure, but basically a double top, and we are up there. The other situation is on the hourly chart, you can see we had that gap, that giant gap between price and the hourly 50. And you can see once it finally started to sell, came down to the hourly 50, bounced a little bit, then rolled over, and then right here, you can see that price flagged directly into the underside of a downtrending hourly 50, and that red arrow denotes when the Moxie indicator has crossed from positive to negative. And so that again was a perfect short, just like right here was a perfect long because price flagged into an uptrending hourly 50 with the Moxie indicator above zero. It's the same rule. Same rule for going long as for going short. You just flip them upside down in order to go that direction. Now, I really do think that the market needs to pull back at this point. It really needs to come back down and test some support. I don't know necessarily where that's going to be. I don't know if we're going to come all the way back down to the low that we just had, 3 weeks ago, or if we're going to come back down to maybe the hourly 200 and we reverse and we bounce from there. That's unknown. But we will continue to watch it because if you look at this example, once we got underneath that hourly 50, and once that hourly 50 started to roll down, you can see it stayed underneath that hourly 50 very, very cleanly until it reached this double bottom and then bounced back up. And then the other thing you can see is notice that when price shot back up again, doing that overall double bottom on a very like a 1 month basis, where did it bounce off of? It bounced off of that lower third Kettler channel. So you can see that even back here, September 22nd, lower third ATR, or Keltner channel. How about the top? What was the top? December or October 12th. That was that third Keltner channel. How about the bottom again? October 29th, again with that third Keltner channel. So if we kind of go back to where we are currently, same thing. You can see here the low was October 1st, third Keltner channel. I believe the top right now is where we are at October 26th, third Keltner channel. And where are we going to go after that? Hard to say, but if it's going to be anything like it was before, we could be coming down here to revisit these lows again. And, by the time this third Keltner channel comes up, it might go back to that range again. So just don't be surprised if we get a really big pullback. Now, I don't think that this is going to be bad for the market. I think that this is actually going to be pretty good. Because if price were to come all the way back down here into this area, what are we going to get on the daily chart? We're going to get that positive divergence on that on the Moxie indicator. Because look, we've had, and this is the way I love to explain it, but notice that price from September has come down and then bounced up. Notice that the Moxie indicator has done exactly that. The indicator has matched price, so there's no divergence. Unlike here on the hourly, you can see that we had lower price, but we had higher Moxie indicator. So we need price to come back down in order to then give us positive divergence on the indicator. So keep watching for that, and that's what I'm going to be looking for. We at least need price to come back down to about the hourly 200. That's what I'm looking for. It may go further, and I'll be okay with that because I like to watch these trends. We're going to be following it. We're going to be following the moving averages, all that kind of stuff. And I think another example, just as another thing to kind of keep showing you how I look at things and these patterns that play out, is if we look at Bug. And Bug is just an ETF for online security things. Let's see. Robert, the moving averages for the Keltner channel is the 21 simple. And so for Bug, we see here, and I talk about moving averages all the time and the angles that they work out. And again, this is all the stuff that I have my own lingo, but I use it over and over and over, so it's very consistent. I mean, to my subscribers, I basically say I'm a broken record because I just say the same things over and over. So it's very simple to follow. We just keep looking for the same things. But on Bug, in this last situation right here on the daily chart, going back, late March 2021, there was a move up. And it did get over the daily 50, which is this magenta colored line. But notice that the daily 50 was trending down. And so what it did is it got over there, and once again, notice it hit the upper third Keltner channel. And what it do? Pulled all the way back down to the lower third Keltner channel. And then once it hit there, off and running. That was the trade. That was the next move. That was the next long-term uptrend. And I think that's what I'm looking for here. And so I think that we are pretty much at the top. We need to have a pullback. It's probably going to be a pretty stiff pullback simply because the market has run way, way too hard, way too fast for the last week and a half. And there's a lot of air underneath that I think once the momentum starts going down, it's probably going to happen pretty quickly because there are so many air pockets up there or just below us. But then what we're looking for is that divergence. You can see here on Bug, look at this line on the daily chart that I've drawn right there. And notice that on the daily Moxie, you can see there's the positive divergence. That's what I'm looking for. That's what I'm expecting the S&P to do, the NASDAQ to do. That's what I want to see. Because right now we don't have any divergence. If you look at Bug, you can see that price went down and price went up right into this peak late April. Notice that the Moxie indicator followed it, down, up. It wasn't until we had price come back down to do basically a double bottom that we got positive divergence on the indicator, which then told us, hey, why do we have an equal price, but we have a higher low on the indicator? It's because internal momentum and internal energy didn't want to go lower. It actually wanted to go higher. And so this is the way that I read the indicator, and it communicates to me. And you can even see here, as a near-term example, look at this. So on Bug, you see how price went higher on the hourly chart on the right? But notice that that higher price did it on a lower high Moxie indicator. And so what it's trying to communicate to you is why is price going higher, but it's doing it on less energy? The Moxie indicator is trying to tell you how much gas is in the tank. And so we made newer highs on less energy. That's a negative divergence. That's not right. Something's going on and it's telling you it's starting to wear out. So Jeffrey, I don't know how long you want me to go or if you guys want me to answer any questions, but some of the other things that I can be looking at, so if we look at pizza, for example, and we talk about this idea of an inverse trampoline move. And I'm reading the comments too, so if you guys have any questions or whatever, just let me know. And the thing you can see here, I put a little line and I put a little caret. That's me paper trading. And the reason I did that, I could see well ahead of time that this was going to be a short, or at least this is a position that you don't want to be long in, because for as much as price went sideways, notice down here on the hourly chart how much the Moxie indicator was declining. It was below zero. It was very far below zero, which means there was a lot of negative energy. And so even if price wanted to go up, this is telling you that there is like no hope that it's going to go positive again. So any kind of up move was a false up move. So for example, look at this one right here, this big move right here on the hourly chart. You might have gotten suckered into that. Maybe you look at that and you're like, oh, that was a really good day. Let's go in on that. But if you look down, notice that the Moxie indicator was massively still below zero. That was a false long. And that is the benefit of the indicator just trying to tell you, like, no, energy is down here. I can't go positive. And then you could look again. How about this one? Try to bump up again. Don't get suckered into it. Notice the Moxie indicator, totally down below zero. And then the other thing, you can correlate this then with on the daily chart over here, and you can see that as price got to the daily 50, and Jeffrey in all of his videos, it's like free parking. He loves the daily 50, right? Well, back here, early May for pizza, Papa John's, the daily 50 was perfect. And I could show you the setup on that one, but you can see that it came down there, it bounced off, and then we got a Moxie price trigger, which denotes that the indicator is now positive. And that was a perfect trade. And so if you think, how about the next time that price got to the daily 50? Is that free parking? Are we going to go long this time? Well, the Moxie indicator is telling you no, partly for a couple of reasons. One, you can see that there was negative divergence, even though price went higher right there. So that was the beginning of the energy running out. And you can see that also here on the hourly, higher price, much lower Moxie indicator. And then as price was kind of going sideways and then flagging into the daily 50, you could just see the Moxie indicator was just falling off a cliff. It was nosediving to zero. And look at the timing of this. You can see that the Moxie indicator went negative at the exact time that price was starting to fall down through the daily 50, basically telling you this is not a good trade. It's not going to hold up. And we could even see this, I'm sure they has I don't know if some of you know Sue McLaren. Uh, she knows some of us in this group, but she always said they travel in packs and they bring their friends. Dominoes, notice this thing, same thing. As it came into the daily 50, Moxie indicator was nosediving from going from positive to negative. The Moxie price trigger was firing, telling you, hey, I'm negative now. And then also, just so you don't get stuck into a bad trade or a false long, notice right here, right about in the September, if you were following the moving averages, you'd be looking at this saying, hey, price is flagging sideways into an uptrending hourly 50. This should be great. And you might have gotten in right here on November 9th. But if you look at the Moxie indicator, it is below zero. It was below zero the entire time. That's an inverse trampoline move. Price should not be over the 50 if the indicator is below zero. And so that helps keep you out of that trade. And you can see here, it just followed it all the way down. And then I would have just been out of it for earnings because I don't like to trade earnings. So that was kind of one thing I was looking at. As far as Tesla, Tesla's been a little wild, of course. But if we look here, the kind of trading that I do, and I know a lot of you guys probably like to do it on the daily chart, maybe even the weekly chart. You guys may not be looking a lot at the hourly. So the daily has had a perfect entry signal, and it's kept you in the whole time and said, don't even look back. So one thing that we notice, and again with Jeffrey and his free parking at the daily 50, if we actually go back here, and I'll show you how this was a false long. You guys see here back April 420 that price was trying to get over the daily 50, but where's the Moxie indicator? The Moxie indicator down here was very, very far below zero. So this was trying to tell you, the indicator was trying to tell you that this is a false long because the indicator is so far below zero, any move over the 50 is not legitimate. That's not right. And then what you can see is we got that lower low, notice that the Moxie indicator had a higher low. There's your positive divergence. That's the thing that's starting to communicate to you and tell you, nope, we want to go higher. I know price is going lower, but the indicator's telling you, no, I want to go higher. And that's what you start paying attention to. And then as we get here, price starts to cross over the daily 50, and look how picture perfect this is. It actually starts getting scooped up and hits the daily 50 3 times and starts to move up. And then what? This is the other thing that I look for, and this is also when I talk about the S&P right now. The S&P is over the daily 50. Me, for what I trade, great. Price got over the 50. What's the next thing? I actually want to see it come back down to test that 50. And what it did is it came back down to test that 50 on September 18th, or August 18th, right there, perfect. And where's the Moxie indicator? It just crossed over zero. That is the perfect timing. That fits the rules that I've written and that I teach people all the time. I want price over the 50, I want it to test the 50, and I want the Moxie indicator over zero, and it all happened at the same time, and it never looked back. So that so far has been a perfect trade and setup for that. And you can see I use the 8 and 21 EMAs, which are the blue and orange lines here. Notice how they were spread. The 8 has been over the 21 the entire time. So the trend has been up. The fast moving average is over the slow moving average. That is the definition of an uptrend. Tom, the Moxie indicator is not on HGSI. Maybe we can work that out. I heard that Gil Morales just got he's got working with HGSI, getting some of his stuff on there. So I don't know, it would be cool. But right now it's just on Thinkorswim and stockcharts.com. So yeah, that was Tesla. And then if we're looking about Ethereum, let me just show you this real quick, and then I'll flip you back over. The two trades, the couple of trades that I've taken here, and Bitcoin did basically the same thing. Talk about that trampoline move, right? And the same thing, like again, broken record. I think my subscribers love it because it's the same thing I talk about over and over and over. So it's very simple, and it's the same principles over and over and over. And what we see here, all the way back, so August 4th. And you know what? Maybe it's a bummer if you kind of miss that move, but I know what I'm looking for, and I wait for it. You know, it's like a hunter out in the forest. You're waiting for that deer to come just right place so you can take your shot. And so just like Tesla, where it got over the daily 50, now granted, Ethereum went much higher, all the way up here, but then what? It came back down, and what did it do? It originally crossed over the daily 50, and then it came back down to test the daily 50. It came back down to test an uptrending daily 50. That is my free parking. And then what it did, you can actually see it spent 4 days below the daily 50. Where was the Moxie indicator? Moxie indicator was above zero, telling you, don't be too scared. Price actually wants to go up. Energy still wants to go up. That is price getting pushed below water, and it's trying to say, no, buoyancy is still up because the Moxie indicator is up there. So that is a regular trampoline move, and you can see it worked out like a charm. It's like you jump onto the trampoline, and it shoots you right back up. And then you can see it's like a pattern within a pattern. How about over here on the hourly chart for October 12th? Another trampoline move. So you just see picture within picture within picture, and you can keep taking these trades in these positions. What did happen on October 12th, 13th? Price dipped below the hourly 50, but notice that the Moxie indicator was still above zero. Bingo. I was waiting for that. I was expecting that because the same reason I'm expecting the S&P to pull back right now because of this giant gap between price and the hourly 50 is the same reason I was expecting Ethereum to pull back, which it did, and then it gave me a trampoline move, which I was expecting, and then when it confirmed, I got in. And after that, it started bouncing along, and you can see here, test the hourly 50, test the hourly 50, and this thing's on a roll. So it worked out perfectly, and even, I'll just show you GBTC, but look at this, right here, September 28th, trampoline move on the daily. So good move. All right, so that's pretty much my spiel. I'll be around. I watch Jeffrey's stuff all the time. We go back years, and I've been to just a lot of seminars whenever we're out there. So pretty happy and thrilled that Jeffrey invited me on this one for the first one, kind of getting back into the groove of things. But as I said, if you guys want to know more about me, I'm over here. You can come find me. If you're interested, we do have some 10% coupons. Really just, if you can't remember the codes, they take a screenshot, whatever, you come over, check it out. They do expire about a week from now. And yeah, I'm over at simplertrading.com. My own branding website is profitpilot.com. So if you guys have any questions, email me, reach out to me. I'm just a dude out there trading, and Jeffrey's known me since before I even knew how to trade and when I was still in college. So yeah, we go way back. But yeah, thanks guys, and we'll see you around. All right, then Jeffrey, how do we get me back to you?
Oh God, right click on my name and make a host.
All right, let's see. Make host. There we go. How's that?
Good, perfect. Thank you. All right. So, thank you. Like I said, I'm going to invite different folks to do their 30-minute spiel on a regular basis. As I mentioned, or as TG mentioned as well, I remember sitting with him and his dad at a crappy casino because Derek Pilger was too cheap to have his meetings at a nice hotel, in their little restaurant, chit-chatting about this stuff. People in the waiting room still admit, oh, I wonder how that happened. They must have left. Okay. All right. So I did put out a request that you put in your your stocks, and we're going to start talking about building a leaders list. Now, a couple of things I just want to comment that were brought up. I wish I could take credit for the free parking. It's Ian's, not mine. And the other thing is that, yes, the 50-day moving average is very important in my trading, but on both sides. It's important because coming up to that 50, stocks often break down, and I'm going to look for signals to the downside. Coming from above it, pulling back to the 50, I'm going to look for signals that the stock is going to go back up. I assume you guys can hear me. Please say yes if you can, and you can see my new home, my new backyard. Okay, perfect. Yeah, I'm moving, not moving. My house in Santa Fe is almost done. If you squint, you can see there's a screen here. That's because that's the screen that construction put. I kid you not. This is the deck, not the deck because it's not 2 stories, but this is the lanai, the portal, whatever they call it in the various places of the country. This is me sitting and looking in my backyard. It goes pretty much straight down the other side of this screen. So I'm very excited. The comment about the markets, yeah, I showed you a double or triple top, which I think is something to pay attention to. I talked about the reversals today, but I will also say, let me just let's look at the spiders. We'll bring up the Qs first. That even though I do use, I mean, what I didn't give TG enough time to do it total justice. He's got some great scans because you might be wondering, how do I find those stocks where those signals are actually firing? So he's actually got that, which is great. Make sure I still in, I want to make sure I took off the semi-log, although I'm not sure I don't want to be semi-log. Okay, I want to stay linear right now. All right, so we close that and we open up my weekly chart. So one of the reasons why you probably won't see within HGSI the Moxie things, although for my kind of trading, it's fine. We don't go intraday in HGSI. And yes, you could get quotes intraday, but the quotes are just updating the daily chart. Mike, believe it or not, I live 10 minutes from downtown. There's one traffic light between me and the center of town. I'm about 6 minutes from the Opera House. It's amazing. We can't wait. Our house is taken forever because of COVID, but we're so excited. So if I look at the NASDAQ, and let's just forget about how wonderful it's been since March of 2020. And I just want to talk about some of the things that I'm going to look at as I look at what's going on in this market. Now, the first thing that I'm looking here is that the weekly bongo just turned green. all right? Now, this week, now when I look back, how often do I see one-day reversals in the weekly bongo? I don't see a lot of them. Here was a short reversal to the downside. So in the back of my mind, I'm going to keep thinking the weekly bongo just said the market's going in an uptrend, all right? My daily bongo hasn't flipped yet. When the daily bongo flips, when I'm green here, so my weekly bongo says long-term uptrend, short-term pullback. So I'm a pullback buyer, so I actually like this signal. I'm going to come back to it. So just remember what I said. If the weekly bongo is green and the daily one turns red, then it's a pullback in an uptrend. I want to find this day right here where it's still in an uptrend and this has turned green. Actually, I want to find it back a few days. And my best buddy, Bob Mager, actually created a scan that will do that for me. So I see we're both green. What do I see here? A red line. I've got a red candle high as described by David Elliott. That a red candle high is a reversal candle. It means that I had the highest high going back 10 or 20, I can't remember days, kind of like pocket pivot looking back. I opened up and closed below where I opened. It doesn't matter if I'm up for the day or not. This is a red candle high. So that's another sign to be concerned. However, I've got the 8-day exponential, the 50-day, the 17-day crossing up above the 50, the 200-day. This little green line is my chandelier stop. So I'm looking at this and saying, yeah, and if you listen to my program this weekend, I said actually I think I'd be happy, I think I said, if we actually retest the 50 for about the same reason that TG said it'd be good for the market for a pullback. But to me, I was thinking more about the 50. So a couple day pullback down to the 50 doesn't change any of my beliefs. Now down here, the mobile breakout from a couple of days ago, still in a John Person buy. The relative strength turned down here. It really isn't, maybe it got a little bit better today, but it's something to watch. When I see multiple pocket pivots, that's, we know that's a bullish thing. And then interestingly, at least on HGSI, it looks like the volume on the NASDAQ was good today. Now that may be bad, and maybe that means it was a high volume reversal day. So I think you got to beware. And but we know Microsoft is up after hours, so that might mitigate that because it's such a big component. If I look at the spider, again, you can be bullish, you can be bearish. There's lots of things that we can be on this chart. And I follow TG's work, and I do have his stuff in a workspace. And I do see here that, we kind of, are we at a double top? No, we broke out of the double top, but we're still in the same double top area on the spiders. So, all right. Same thing here with the reversal, but we had the red candle high over here. I'm surprised that this isn't one. Don't know. I have to look and do the counting. But I'm looking down here. Before I'm going to give up the ship, let's go back over here. If I was a really good guy, really good trader, I would have noticed right here that the market was in trouble. Why? I had some of these, let me make it bigger for me too, since I'm projecting this on my big screen projector, which is not very close. And all these narrow range bars here, and the market was rolling over here. That's pretty clear that the market's in trouble. I would expect a retest of the 50, and I didn't get it. And that's when I would have been concerned. And you would have seen me probably up here loading up my contra ETFs. Now, what else would have told me I had a problem? Well, the daily bongo started going sell very early. All right. and this is confusing, of course, because longer term we're still going up. Then I come down here, the John Person sell signal came in on this bar. And then here is when you probably should have gotten nervous because you had a Phoenix. So for those who are not historic HGSI people, I will put a reference to this PowerPoint. And basically, a Phoenix is sweet music to the bear's ears. Here's the math of a Phoenix. This is, a big Phoenix. That's a small Phoenix. I guess I have different colors. And it's calculated on the NYSE, but you can also use the NASDAQ. It's an extremely bearish day. It often predicts a reversal to the downside. If you start seeing these after the market's destroyed, it's exuberance. So these are Phoenixes. That tells me a lot. That tells me, and then I had a couple of kahunas. So it was pretty clear back up here that this market was breaking down. And had you got out of the market around this Phoenix day, you probably would have avoided a little bit of the damage and then look for a reason to get back in. I don't have those here yet, so I'm going to be looking for them. So yes, if I was a really good short-term trader, I'm going to take exactly what TG said, and I'm going to be concerned that this market is going to roll over. And I am, but I think earnings are going to drive it, and it's probably more, they're probably as important as anything right now in what the market does. The diamonds, boy, the diamonds have moved 30 stocks. None of which, well, I guess Microsoft's in there, so it's going to make a difference tomorrow on the diamonds. Same thing, red candle high. Yes, your relative strength, you've got a negative divergence here where your person market catcher, which is a relative strength driver, has gotten less. So yeah, I would expect this to do something. Now, something could be as simple as sideways move. With all due respect to TG, and he has his way and I have my way, and I can tell you that you can run up channels for a while, and I was going to point out, but I was muted. Yes, things top at channels. Things top at the top of the channel, tops at the top of the channel. But how many days was it at the top before it rolls over? So it doesn't mean it's tomorrow. It certainly could be tomorrow, by the way, but probably not with Microsoft earnings. So I concur that this market has had a nice run. I concur that there are signs that this market could be getting closer to a short-term top. But I think, and I think we're consistent, a pullback to support and then a move higher into the end of the year. But we don't have to see a big pullback. And at the same token, tomorrow that they could come up with a deal that they're raising taxes on everybody and the market could implode. I mean, I have to believe that even though raising long-term capital gains on individuals historically doesn't kill the market, once people start to realize that that's out of the current discussions, that's got to be very bullish. I want to talk now about something I learned from Ian and Ron, which is a leaders index. And I love leaders indexes. And I love leaders indexes because a leaders index will help get me out of the market. So I've asked you to give me stocks and I want more, okay? Because I don't have enough. So typically, if I was going to make my own leaders index, and I probably will, because we're not going to be on this call long enough to do this justice. I'll work on one tonight, and then I'll post it. If I was to make my own leaders index, I would. All right, now I got too many things open. I got to find what I just did. Oh, come on. All right, let me shut this thing down. I'm looking for my HGSI window that I just opened that's got, oh, please don't do that to me. It's got to be here. Here it is. I found it. So we're going to call this new group Index Club 10.26.2021. So again, I'm going to talk about it right now with you and look at some stocks. And then I'm going to do my best tonight and tomorrow so that it's today, what, Tuesday? So by tomorrow night, I'm going to give you what I think is going to be my leader. So we're going to put it in Microsoft, and we're going to look at these. Microsoft, NVDA, Lucid. I'm happy because I own the first three, which may be bad if the market sells off. SITM, INMD, it hit reverse, it was a CLF, yep. You wouldn't normally see Cliff, although I remember the days of Alpha Pro, I think it was Alpha Pro, there are Cliff bought this coal producer, and that was the top of the market. I just put in a Y. All right, hold on. So I got Cliff. What else am I missing here? I got AR. Yeah, we'll definitely do a live meeting in Santa Fe once I'm there. Of course, because my wife wants the house to be special, I'm not allowed to have a trading room, so I got to go find an office somewhere to work during the day when I'm there, because by then I'm going to be retired, so I'm going to actually have a chance to do that. All right, so AFRM, is that a firm? Yep. All right, I'm trying to capture these, and then we're going to look at them because there's some great stocks there that I recognize already. CAR, UNP, CAR, okay, UNP, MUR. There's NVIDIA again, ASAN, HUT, MARA, HIVE, SKIN, UPSD. Oh, I made money on that puppy. SLI, XM. Is that XM? Okay. All right. So all right. So I'm just going to run through these and talk about them, ZTS and DHR. I'm going to add those, and then I'm going to stop for a second of asking for things. All right. So I got somewhere. All right. Open this back up. The problem with having multiple monitors is things are all over the place. All right, I had ZTS and DHR. ZTS, DHR. All right. So I've got this. I got to find. All right, it's just got to be a yes. Okay. So I'm going to put these over into the warehouse view, and I'm going to stick one of my views that I like, which is high analysis. And this is just, when I look at these stocks, I want to find stocks that are not much off their high. So Lucid, I have to believe it's running now because it's way off of its highs. All right, so I'm just going to go through this list and comment on whether or not this is what I would consider a leader and whether I will leave it in the list. And, you know, I'm going to cover up the weeklies, but this is what a leader looks like. This is tight, okay? This is kind of intermediate at best. I like tight. I used to come up with a list of like 50 stocks, and I get to the front of the room, and I go, in front of Ian, and I would go through one at a time. They'd make the audience tight or loose, tight or loose. All right, so, all right, let's pull it up and look at daily charts. Let me give a little bit more time on the chart. And, okay, so definitely lower left, upper right. It's at its all-time high. It's been a nice steady run from 120 up to 250, and we're in 1 year's worth of time or less. Look at the relative strength. I've tried to get as close to the IBD relative strength. It's hard to read here. It's hard to read on my charts. If it's green, it's 80 or above. Yellow is 60 to 80. Red is below 60. So I would agree. So I'm going to go back into my designer. And I'm going to make a subgroup. And I'm going to call the subgroup, add a group. And I'm going to call the subgroup keepers. Does that work? Oh man, where is it? Over here. Oh goodness. Okay. All right, so we have a subgroup called keepers, and stop. Now, just as an aside, I did tell you I don't sell anything, and I don't sell anything. Let me go back to where we were. But if somebody is looking for a killer notebook. I have one, I put it on the board. I don't think people knew exactly what I was selling. It has got the same processor as this desktop computer that I'm using does. And AMD, all right, I got to figure out hold on, I got something that's not closed. It's up here in this corner somewhere. Why is that not happening? All right, Ron, can you see what? Okay, maybe that did it. Was that to do it? All right. And so it's got an AMD 5900 50 processor, I believe, or 5900 something. It's got 32 gigs of memory, 4 terabytes of SSD. It has the same video card in this, an NVIDIA 3080. And if you have interest and you want to know why you should spend over $2,500 for a notebook, email me and I'll talk to you and tell you what I'll put on it. It's worth a lot more than that. So I'm making NVIDIA. I'm going to add it to group keepers. So I got to go find where I put the group. So it's under users. It's going to be under leaders, index club, keepers. All right. So let's look at the next one. Microsoft. Now, interestingly, when I look at Microsoft, and let's give it a little bit more time, is it a leader? Yeah, it's lower left, upper right. It's relatively tight for great periods of time. Hasn't had the same amount of move. It's not really extended like the others. I'm going to skip it for now. Not saying it's not going to do well tomorrow. I'm going to skip it for now. Cleveland Cliffs. Yes and no. This is loose. It's all over the place. If I look at a very short-term period of time, it's a leader. I'm not going to want it in my index. And as I said, I have a position. I have a big position, which I may not want to keep a big position with that long-armed leg doji bar. Those who know me know I won't even say the 2 words because there's ladies on this call. I get very excited by earnings. I don't want this in my leaders list because it's not a true, it's a commodity play and it's tied to the dollar. It doesn't meet my criteria. This one, Lucid, no, it's maybe a great stock and maybe it's the next Tesla, but it's not a leader. Leader, done, great stock. And of course I sold it back around 90. What a buffoon sometimes. Look how tight this run was here. Gets a little looser here, and now it looks like it's going into a climax run, tight as can be. So, is this a leader? Absolutely, that's got to be in my list. So I'm going to call it a keeper. All right, great stock pick. Now, a quick story. Just because it's on this list doesn't mean you want to buy it, because to be on this list, you pretty much got to be extended. Here's my high jump. I'm maxed, but things can continue to get higher. And I remember Ian would say, yeah, there's some guy in Hawaii. I don't know if it was Mike Scott or whomever. And they'd be buying the stocks even before I would get home from Ian's meeting. You don't buy these because they're often extended, but sometimes they'll go higher. Hut. You know, if I want to put a little stock in that's volatile as heck, the stock's gone from 3 to 12. I think it's got something to do with Bitcoin mining, obviously, because those are the other ones. I want to put it there, but I'll take it out if I find something better. Let me get some more. I want 15 to 20 stocks. I don't want more than 2 in the same industry groups. So that means I'll have at least 8 to 10 industry groups. And then I'm going to make an index and I'm going to track that index. But we'll talk about that again in a few minutes. So a little loose, but it's a leader. Union Pacific, you know, I'm going to give it to you because transports have come alive. Is it a leader? By the definition of, has it doubled in a short period of time? And that, no, but it's gone from 190 to 240 in a month. So it would be one that would get cut if I can find a bunch of better looking leaders. And again, do I want to buy this up here? Probably not. It's run. And again, you're seeing pocket pivots after pocket pivots. So it's getting a lot of exuberance. Marathon Digital, I'm going to go with Hut, and I'm not going to put this one in. Yes, it's had a big move up, but this is the definition of loose. All right. And by the way, I'm not the arbiter of all that's good in this world. I'm just, talking from my head and my experience. Yeah, I wish I owned this stock. James Ropel talks about this stock all the time. He thinks the stock's a monster and will continue to go. It's not tight by any means, and that is a negative, but it's run from 88 to 150 in 4 months. It has a lot of characteristics of a leader. The 8 days above the 17, above the 50, above the 200. Again, I'd rather have it up here and at all-time highs, but I would put this in my keepers because right now it's a leading stock. What is this one? Standard Lithium. Well, I'm just going to put it in. I don't know if it's the best lithium to play, but there's no question that lithium is doing well. The downside of this stock, too loose. Next one is InMode. Yeah, great stock. And how many people do you think got stopped out of this stock today? Look at that bottoming tail. Closed back. Think about the market. The market, the tail was on top. Here's a stock that got a lot opened, had selling pressure, and came back and closed up on the day. Yeah, I could pick on this. Relative strength is getting down, but it had a high volume reversal day. I'm not paying attention to when earnings come out, and I'm going to put that in the keepers. That's a beautiful, little looser than this is kind of loose, but it's clearly a leader. Matador Resources, we got to have some energy. Do we put in Matador? I mean, the one I've been playing is PXD, but it's slowed down. So it might be that Matador is the right one. PXD, you can see it slow down. Apache has looked good. So do I want Apache, which has gone from 17 to 29, or do I want Matador? Probably doesn't matter. And the reason why I say it probably doesn't matter is because they'll both go up or down together based upon what energy does. I'm going to give you Matador. I like that one. Quick add to group keepers. Hopefully I kept the right order. SITM. Yeah, I mean, it's not tight, but it's run from 60 to 230. Heck yes. What a beauty. It's breaking out and running again. Now, here's where people like me who like earnings get in trouble, is when you get married to these things, they don't meet them. But look at the earnings per share growth of this stock. It's not a big company. The revenue is smaller than my company. And my God, I wonder what the market cap is. 4 billion market cap. Beautiful. Great choice. All right. This one, you might know something about this. You may have some good information it's going to run, but it doesn't look like the rest of the leaders. I see a bunch more added. We're going to look at them in a second. Hive Blockchain, $5 stock, too little for my taste. ZTS, so I'm looking at it. It's run, I like it. I mean, 150, 2.25. It's breaking out, not extended yet. I'm going to add that to keepers. So you guys picked a lot of good stocks. I said don't pick Tesla because I'm going to pick it. So we're going to put Tesla in the list too. All right, there. So now uranium royalties. I don't like all the red there, so I'm going to skip that one. Murphy Oil. I already put Matador. I'm okay having two energies. I'd rather have Apache than this one. This one's going flat. So I'm going to write down on a piece of paper so I don't mess up where I'm at right now. Or you guys can remind me. Apache and Tesla I need to put into the list. Now I'll just leave Antero. I don't need Apache. It had a down day today, but again, what a beautiful, tight as can be, pullback, nice run. I like Antero, so whoever picked that one, nice. Again, And I looked at them over the weekend. These earnings per share growths on these energy plays is crazy. Yeah, I would call that a leader. You know, it's sideways. I mean, here's one, and I'm not saying what to buy, what not to buy on this because I don't know anything about the companies. But here's a leader that's now gone sideways for 2 months. I might not put it in the list because it's going sideways for 2 months. It's not really, but if I was looking at stocks to put on a watch list, I'd probably have that on a list to look at. All right, this is the index, not a leader. Yeah, I mean, I don't get this at all. Look at the earnings per share growth. It's a leader. This is Avis Budget Group. You saw what drove Tesla to $1 trillion, didn't you? It was a deal with Hertz. Okay, see some good notes there. I travel still. You can't even find a rental car. Thank God for corporate deals. Asana, I'm not going to penalize it for today, and I'm going to put it in the list because it's another one like Unity that I want to just give myself a something bad because I've watched it go up and I haven't pulled the trigger, and I've looked at it so many times. It's clearly a leader, although it had a bad day today. Affirm, same story. If you ignore the colors of the bars and you just look at this run up here from 68 to 162, just like that Unity, Affirm. Man, there's been some really good runs in this market. Upstart, I did play. I'm not going to put Upstart in as much as I believe it's a great. It's because it's pulling back. It's already broken down, and I don't want any stocks that are broken down. I got in on the. I bought it here because it broke out of its whatever chandelier stop, and I didn't notice the earnings were the next day, and then the earnings went up and had a big gap up, and it made me money, but it wasn't because I was smart, because I probably shouldn't have done that. All right, so some of the ones that I wanted to add, and then we're going to go back to yours. Tesla, I don't think anybody in the world would deny that Tesla is a leader. You know, this is probably one of those scenarios when a log chart looks a lot better, but it's, 728 to almost to 1100 in a couple weeks, a couple days, keeper. All right, I don't need wrong way. I'm putting your stocks in. I ignore this one that didn't come up for the right reason. All right, so I got skin. I looked at SLI. Another lithium play. It's beautiful. All right. I'm going to put it to the keepers, and I'll probably drop one of them tonight because I don't know if I want two little lithiums. XM. Yeah, I mean, again, there might be something to this, and it might be a stock because it's pulled back here, breaks out. I might be interested in. I'm not going to call it a leader. DraftKings, another one that I didn't hold long enough. This one shook me out. Yeah, I love the store. Wait, that's not Draft. Oh, that's Datadog. No, it's DraftKings. I don't want DraftKings. I want Datadog, right? Yeah. Forget that. Wrong. Not just heck yes, HELL yes. Definition of a leader. And I got shaken out in here and I never got back in. Definition of a dummy. Wow, beautiful. Love it. All right, see, you picked out some really good stops. KKR. Yeah, I mean, BX and KKR probably are similar. I still own KKR. It's not, well, yeah. Again, no more than two in a group. Apollo looked okay when I looked at it. You already hit these names. DraftKings, I didn't like. Net, another one I owned for a long time when it was in the 30s, and then I forgot about it. You know, one thing I'll put there as well, I'd really like if I could do an HGSI, is turn off the symbols and the names and look at charts and not have any memory. I would be a much better trader. All right, so let's look at what we put together. And I'm going to show the point of this. Again, I'm not done with this yet, okay? But we picked out, really? Are there 22 stocks in the, 22 or 27? I can't even see the number. 19 securities. All right, oh, there you go. I got 19 securities. Let me put scorecard group combo. We can see, do I have any groups? So I got 3 application software, so I'd have to probably lose one of those. Other than that, they're spread out as far as what they are. Now what I'm going to do is I am going to build an index in the group. I'm going to find that index, and this is a index of current leaders. Now I think I can do better, and you know what? I'm going to give you all an assignment. I want every one of you to post on the IO groups in the next 3 days. Then on Sunday, I'll compile them and come up with the leaders list instead of doing it tonight by myself. You saw what I did. I went through stocks. I want stocks that look like this. I want stocks that are extended. I want stocks that have gone up 30, 40, 50%, 300% in the last year. I prefer tight, and when you start to get an index of a lot of different individual names, it tightens up. And why is this important? It's important because this run in the market is not being led by Ford and GM and Amazon and Facebook. It's being led by the stocks that you gave me today. I think we can do better. What Ian taught me and taught Ron and taught many of you was you create an index of leading stocks, and then every day you track what that index does, because often the leading stocks are going to break down before the rest of the market. And you're going to look for a period of time when the leading stocks start to break down. And you're going to use that as an early warning signal that the market is going to roll over. So that's how, it's exactly what you do, is you could, I mean, there are different ways of building it. Everybody has their own favorite groups. I typically would start with all securities, and then I'd probably put a filter on them, a price and volume, because I'm only interested in things of $5 and 500 and K, and that's going to lower the list, make it smaller, and it's not normally this slow. It's just I got 1,000 windows open, and then I might come down here and I would start to look at, Tom, you're on. I actually love your stuff. I look for, I've got certain things about that I use to find leaders. Leaders within 5% of their 52-week high. All right. Now, these may be horrible stocks, but I'm going to take price and volume, and you're close to your 52-week high, and I'm going to go through this list and start to build. Mosaic certainly was good to me, but maybe its time is done. Another one in the agriculture space is this Nutrient. Darling is in that space. Interestingly, these are all agricultural producers. Maybe this one's interesting. And I want to go through stocks that are near their all-time highs. Why? Because if I'm looking for leadership that's breaking down, I want stocks near their all-time high. Not that. So if it's hard to find them, that should tell you something in the market too. So I usually go through this list, and I think I could probably argue that cadence, considering the 125 to 175, we all have our ways of looking. So on that note, let me bring it home. I haven't seen a lot of questions that I haven't answered yet. So I'll stay if there's questions, if you want to type them in. I hope you enjoyed this. I enjoyed it. Next time I'm going to trust you guys and unmute everybody and let everybody chit chat. Dr. Keith Wade will come on, and I know when he's been on in the past, I've had positive reviews, and he gives you a discount on his stuff. Although I bet if you went and look at it before he comes on, he'd still give you the discount. I look forward to live meetings. I really do. But at this point, this is probably the closest I'm going to get. So I haven't seen any questions come in. I miss Ian. I'm sure I'm not the only one. And he's the one that taught me this stuff. You all have a great rest of the week. I think we could have a couple of difficult days. I mean, hit the expected move. You saw the Moxie move. But I also know that it's earnings time. Thanks, everybody. And we'll see you next month. And I'll see you on Sunday.